Have you ever wondered why certain levels on a stock chart act like an invisible barrier or support and resistance level that you cannot see? Well, today I'm going to unlock that mystery for you guys and give you guys some sauce, a tool that all traders use called the Fibonacci Retracements. And I'm going to show you guys how to plot it on a downtrend or an uptrend or for an all-time high market, which is best and ideal for an all-time high market. Now in this video, I'm just going to show you guys how to apply it to your chart and how to chart it down, whether we're in a downtrend or an uptrend, because there's two ways to chart it down. And be looking out for a part 2 for my exclusive members that want to learn how to trade the Fibonacci levels and wait for reactions at these specific levels so you can get an ideal trade setup in your favor. Now let's stop all the yapping and let's get right to the chart and show you guys how to do this. So here's the sauce on how to plot these bad boys on your chart. Before we get into the downtrend, we're going to show you guys how to chart it on the uptrend. Now the best way to grab these and chart these out is you want to grab the lowest point where we started to do the uptrend to the highest point of the uptrend, which in this case, guys, we're going to grab the lowest we can on the 4-hour and the all-time high level that SPY hit. I'm going to show you guys what it looks like in the future when these levels get hit, the reaction, and how you could have traded it, which is important. Fibonacci retracements are widely used by a lot of traders because they're mathematical patterns and backed up by a statistic, which is really strong. And basically, if you're lazy and you don't want to chart your own support and resistance levels, Fibonacci retracements come in handy for you lazy people that don't want to do the work and want to add Fibonacci retracements on your chart. I myself find levels specifically, and I also add Fibonacci retracements, and I find myself having the same level as these bad boys. So if you do your own due diligence, you can find these same levels on your own, but here's how to do it on an uptrend, and then we'll get to talking on the downtrend. So here we are on the 4-hour, and even if you want to trade on the 5 minutes, it does not matter. You can use it preferably on a higher time frame, guys, because the higher the time frame, the stronger the move. And we're just going to grab the lowest point that SPY ever hit, which is way down here, which is 408.91, all the way stretched all the way out to 565.39. Boom. Now you have your uptrended Fibonacci retracements, and now you can wait for these levels to get reacted on the downside. And let me show you guys what that looks like now. So here we are on the 4-hour, guys, and we're going to grab this low of candle, which is 492.20. And we're going to stretch it all the way out to the highest point, guys. Because remember, if you're going to chart an uptrend, Fibonacci retracements, you got to grab the lowest point to the highest point, which in this case, it is SPY's all-time high, which is 565.39. And the way to find these tools is I'm on Thinkorswim or Charles Schwab, and you just want to hit the middle of your mouse cursor and you can see all these tools, and it's called Fibonacci retracements. Now I grab the lowest point of this, which is 492.20, stretch it all the way out to the highest point, and that is how you get your Fibonacci retracement levels. Now let's jump to the future and see how these levels got reacted on in the future, which is what you want to look for and how you can spot your trades if they get retested or broken. And as you guys can see already here in the future, here we are. And look at this, guys. Look at how important this is. This is the best thing you can find. After we hit the all-time high levels, we started to retrace, just like I said. How can you find these invisible support levels that you do not see on the chart? This is the mystery. This is how you find it. This is how you solve it. Now we have that 23.6% fib level that got bounced on. We retrace to this Fibonacci level, hence the word retraced. Fibonacci retracements. We retraced back to this level and bounced. After we got that nice bounce, we broke back below it. Now we're below it, guys. What happens next? Every time a support gets broken, it acts like a resistance level. Now we come all the way down to even retrace to the next Fibonacci level, which is 38.2% fib level. Bounce off of there again. And where do we head next? All the way to the 23.6% fib level. Here we are today, July 29th. And as of right now, we got that rejection. Now just based off of the Fibonacci retracements, it's very easy to predict that we most likely will drop all the way back down to that Fibonacci retracement level, which is 38.2% fib level. And this is why traders use it in their favor, because it tells you where the price will most likely head to next. Hence the invisible support and resistance level that you cannot see, but now you can, because I gave you guys the sauce on how to find these in an uptrend. Fast forward to the future, and how does it react when we finally get down to these levels? It retraces. So I'm actually going to keep this up for my own personal chart, because to be honest, I think we're going to be bearish and most likely will drop tomorrow. But anyways, now there is no necessarily right or wrong way to do this. I'm going to show you guys a couple other examples for an uptrend, for grabbing the lowest point to the highest point, and show you guys that you guys can also use other various low points. You don't necessarily actually have to use the most lowest point on the bigger time frame. What you can do is this. If you feel like that retracement was so far, you can even grab any low, guys. You can even grab this low right here, which is 518.36. You can grab 518.36 put it all the way back to the highest point, and you guys can see again, look at the reaction. This is the whole point of why you want to have fibs on your chart. It basically acts like a support and resistance for the lazy people. If you're lazy and if you don't want to go out of your way to do the homework and find these levels on your own, you can add some fibs down, call it good, wake up the next day and trade these levels. Now, I already had this specific level charted already, and this is how I made my gains today, because I saw the rejection of this 38.2% fib level, and that was how I was able to make 20% twice on both my trades just based off puts, because guys, tools and everything on all the analysis is telling me that we're bearish. Now, most likely we're going to continue on and retrace down to the 50% fib level again, but I just want to show you guys that there's multiple low points that you guys can grab. You don't necessarily have to grab the lowest you can find. There's other lows you can use. And one more last example, let's go over this last one. I could even grab a low in this general area right here. Now, it is going to be real close and there's going to be a whole bunch of levels, but look at the reaction again, guys. Comes down to bounce off the 38.2% fib level, gets closer to 23.6, ends up falling down and keeps touching these retracement levels and bouncing off of them and rejecting and bouncing, and you just want to see a reaction. That's all it is. Now, I think personally for my favorite setup for this specific area is I like to grab this low down here, the 492.20 level. And I will use that for tomorrow because, to be honest, the higher the time frame, the stronger the move. And I do like the reaction around here, guys. I do think we're going to continue on down. But now let's talk about how you can spot this from a downtrend perspective, because I just showed you guys how to grab the lowest point to the highest point to show the retracements for an uptrend. Now I'm going to show you guys what happens and how we can start retracing from an uptrend to a downtrend and maybe retrace back up. So you guys can just use these levels for your reaction trades. So on the same SPY chart, I'm going to show you guys one more thing. Now we just went over the uptrend side. Let's go over the downtrend side. I'm going to grab the highest point SPY hit, which is the all-time highs 565.39. I'm going to bring it all the way down to the most recent low that just happened on Thursday last week. Look at the reaction here, guys. This is beautiful. This is so important, and anybody that actually cares about their education is going to watch this maybe 2 to 3 times to understand that when I say look at the reactions, that is the most important part. I don't care if you're correct and you say SPY is going to drop down $2. That does not matter. What matters is that you actually traded it and put money where your mouth is, because you understand these retracements are going to hit. Now, this is another chart that I'm running on my own because, guys, I'm going to use these Fibonacci levels, which is the most highest point, all-time high, to the most recent low. And look at the reaction here, guys. Let's just talk about it real quick. After you plot that down, you guys can already see the reactions. We started to retrace back up to the upside, rejected 38.2% fib level, which is a retracement level back to that area. And here we are coming on back down. Now you can even do the same thing in this general area and grab the highest point, because at one point, this was the highest all-time high point SPY ever hit. Then you can grab it down to where it fell, the lowest low, or like I said, you can even grab this low way down here, guys. But let's just use this low and call it good right there. Now we're gonna go over one more example for how to chart it from the highest point to the lowest point for a downtrend. One more last example. I'm gonna grab this most recent high, which at one point was the all-time high for SPY, and I'm gonna grab this lowest point. And you guys can see the retracements levels get respected or rejected here. Breaks on above the 23.6% fib level, which at one point was a resistance, gets broken, breaks past the 38.2% fib level in the pre-market after hours, whatever. Comes down to retest this general area again. And guys, just look at the reaction. Every time we hit that 23.6% fib level, which is a retracement, we end up bouncing above onto the upside. Now, the cool thing is you can even use that 100% fib level as a place to take even more positions. Guys, as soon as you break that most recent all-time high, we come back to test that. And you guys can see on the Fibonacci retracement levels, if you were just to keep that level there, you could have took calls the moment we retrace back to that general area. That is a quick video on how to plot these Fibonacci retracement levels. I might go and drop another video on some more examples, but the next one for my exclusive members are going to be how to trade these levels, some live trades of these levels, and how you guys could have entered and what to watch for on these specific levels. Because guys, you don't want to just enter just to enter. You want to wait for a reaction. You want to wait for the candles to show you a sign of what the story's trying to tell you if we're going to take bulls or bear side, because overall you just want to find the best trade setup in your favor. That's all we do as traders, is try to find the best trading setup in favor. So hope that video helps. I hope you guys learned something new. Now for all my exclusive members, I'm going to show you guys how to trade that in the next video.